Hi, this is Steve Boone. I'm the director of the Cannabis program at Mosaic Insurance Alliance in Linwood, Washington. We are in part 5 now of our series of videos on building ordinance coverage. If you haven't watched the first 4 parts, I encourage you to go back and do that. Our topic today is going to be how to set an appropriate limit for building ordinance coverage. We'll take each one of the coverages in turn. Coverage A, which is loss associated with the undamaged portion of the building following a loss, that is just a simple coverage that you purchase. It does not require you to designate a separate limit of insurance. Most underwriters just charge for that, charge for coverage A. Probably 10 to 15% of the property premium is going to be enough to get you coverage A. Coverages B and C. Coverage B is the demolition cost, and coverage C is the increased cost of construction. I recommend to my clients always to purchase a combined limit for B and C, not to purchase separate limits of insurance. You always want to have as big a pot of money available to pay whatever items you need to pay, rather than try to anticipate upfront what those costs are going to be. So I usually recommend for coverages B and C combined, if you have a building that is 0 to 10 years old, I always recommend that you have a limit of at least 10% of the building value. So if you go back to our original example where we talked about having $1 million building, if you have $1 million building, you should have at least a limit of $100,000 for coverages B and C combined. If you have a building that is 10 to 20 years old, a minimum limit we should be 10 to 25%. And if you have a building that is over 20 years old, you should consider a limit of anywhere from 30 to 50%, because building codes, as we talked about, evolve over time. No layperson tracks them. The only way to really know what building code upgrades are going to be required following a loss are going to be an architect or a builder who can come in and give you a solid estimate. But I have found that my clients who follow the rule of thumb that I just laid out for you are not going to be disappointed after a loss. So again, the rule of thumb is 0 to 10-year-old building, 10% of the replacement cost value. If 10 to 20 years, you should have a limit of anywhere from 10 to 25%. And if you have a building that is more than 20 years old, you should consider a limit of anywhere from 30 to 50%, because as we talked about, building codes evolve over time, and it can be very difficult to anticipate all of the code changes that have occurred since the building was originally built. Now, is this going to add to your insurance costs? You bet it will. But property insurance is still going to be relatively inexpensive. So if you want a building ordinance limit, let's say of 10%, it's going to add just 10% to your property insurance premium. If you want a 50% limit, it's going to add 50% to your insurance costs. And that sounds like a big percentage, and it definitely is. But property insurance, again, is relatively inexpensive. And if you do have a loss, that small amount of premium is going to be something that you wish you'd paid in order to have sufficient money to rebuild the building without incurring a lot of out-of-pocket costs. Building ordinance is a definite part of any building claim. You need to have the coverage. If you don't, you're simply not going to have the money to rebuild the building, and you're going to have to dip in to whatever assets you have to get those building upgrades paid for. So I encourage you to take a look at that as your property insurance comes up for renewal. It's a critical part of your insurance program. If you have any questions about building ordinance coverage, feel free to contact anyone here on the Mosaic Cannabis team. We'd be happy to help you out in either setting an appropriate limit or giving you some cost estimate to add to coverage. Thanks a lot for staying tuned throughout this series. I hope you found it helpful. Have a good day.